Welcome to another AriasWave video. And in this video, I'm going to talk about the Australian stock market versus the 10-year yields, the bond yields. And I want to talk about how this fits in line with my analysis for the US market and how I believe there's a top coming due to basically interest rates skyrocketing much higher. So the Australian bond yields, I'll get to in a minute, but for now, I just want to show you this chart of the Australian stock market going back to 1900. And as you can see, I've labeled the chart with a 1 and a potential 2 incoming. So from this analysis, I gather that this particular move up since the 60s and 70s was purely a corrective move. A set of corrective patterns, right? And those patterns coincide with AriasWave. So this is a little bit different than the previous analysis, which I had posted a while back on the Australian stock market. And I just kept looking at this chart over time, and I was never convinced that the move since the 87 stock market crash was just an impulsive move higher. It just didn't make much sense in that regard. And so therefore, for me, I had to sort of try and think, what could it be, this move that's been dragging out for so long since that time? And even the GFC was amongst all those waves. And part of the reason why I am not convinced that this is an impulsive move higher is due to the GFC being a 5-wave move. And a 5-wave move would not come in that spot there. It would be more likely an A wave zigzag that happened after that initial move higher in 2007, I believe. So for a long time, it's been a subject of my fascination to get this labeled properly. Now, this makes a lot of sense if we are expecting interest rates to skyrocket, because that is the inverse of the debt market, and it would signify that the debt market is basically collapsing, the bond market. The bond market would be in free fall if that was to be the case. And given that inflation is still rising and basically the debt in the system, this would cause a catastrophe. Now, there's a little bit more to the yields chart that I need to talk about compared to last time I made a yield chart video. This may happen in stages. I'm not 100% sure just yet of how that's going to pan out, but a 5-wave move down would have to be pretty significant in this market. Basically, I could see this crashing down to the 70s, 60s and 70s, sort of 70s levels. And the reason for that is because the end of correction wave E tends to come back and retest the breakout of the previous impulsive move. Now, it doesn't always happen, right? It doesn't always happen. But what we could see potentially is something that comes back to at least the 87 crash area, which would kind of suggest higher highs in this market. Okay, now that is also very possible. But because we don't know the future, we can only make assumptions. I will give you some information to mull over in order for you to sort of just start to build a case as to why there could be it could be the worst case scenario. Okay, so let's just say the wave D is almost complete. Okay, now this chart here is it's not the most recent chart, but that's fine. You've got the idea in your mind now. A, B, C here is the 87 crash. And then since then, behind this chart, we have, sorry, let me get rid of this. We have that long pattern. So how do I pull apart this wave, this large, huge wave. Now, for me, what I can see is we had an initial wave A. So basically, a zigzag contains these waves. We have the A wave, then we have an A, B, C, D, E. Now, this is AriasWave. It's not AliasWave. So this is why you may not really understand this, but I will start to teach it on this channel. So basically, what happens here is you get 5-wave internal structure, and within that internal structure, you can have a variance of these corrective patterns, right? So what happens is you can get a wave A. So when I say A, the initial move, it's in brackets, right? So basically same as this here, right? And then the subsequent wave A would be just a wave A label, okay? So what that means is, in this case here, we had wave B, which expanded much larger, right? So that's what happened to wave B. It was just very large, okay? Now, obviously, this is still not as large as what it turned out to be. So let me just make it a bit bigger. You know, it was basically nowhere near that. Right. Now, I'm going to get into detail in a minute, but let's just sort of picture this one the way it looks here. And then you got the C wave, GFC. Okay, this is the GFC wave. Okay. Oops. So that wave, if that was to be a corrective, the start of a corrective wave, that wouldn't be a 5-wave move. Okay. So the GFC was a wave C, and then what came after the GFC all the way up until right before COVID was another zigzag. So it was the D wave. So even that kind of, expanded, a fair bit right before the COVID 5-wave move. Now, this is my opinion. You don't have to agree with it, but this is just what I'm seeing now. Right? And so what happens when you get the D and the E, right? You get the end of B wave. Okay, you get the end of a B wave in brackets. So then what is the rule to complete this zigzag? Is it has to make one more high above the previous corrective waves of the internal wave B in brackets. Okay, so what happens is you get a 1, 2, 3, 4, 5, right? Now, this is not how long wave 5 is here at the top, but this is just for illustration purposes. That will give you the end of wave C. Okay. Now, oops. So this is basically what I see is the pattern that happened up the top here in the Australian Stock Exchange stock market since the 87 crash. It was basically what I call a type 2 expanded zigzag, right? And I do teach these on the course. Now, mind you, this is also a 5-wave move. So the reason I'm not going into total detail on these moves is just for simplicity. But if you would look in each of these B wave components of a zigzag, right? Even in each 2 and 4 of a 5-wave move, right? You would see this exact same pattern as well, right? The AriasWave set of corrective patterns, which is the portion in here, the 5 waves of the correction. This is literally what AriasWave is all about, right? So therefore, I must conclude that the end of this move is probably near, because we've already surpassed the previous corrective levels of B and D. And now I'm just waiting for this basically to top out and then start moving lower in that wave E, right? Now, this is just another way that the waves operate. Sorry, this is just the way that the waves operate according to AriasWave. It's been observed on many years, many hundreds of years of chart analysis and back testing, and I've never seen it not be there. I've never seen it not exist. Right? So that's what I see happening in the Australian stock market. The Dow Jones is it's a bit of a harder pattern to track, but I'll get to that once again in another video. Now, if we go to the Australian 10-year bond yields, right? So this hasn't been labeled, but this is essentially the low down here. And you might ask, okay, well, what was this low all about? Okay, now, basically what it is a wave 5 of a wave E, a long-term wave E, right? Now, if you look at, it's the same as the US bond yields, 10-year. If you look at that video that I'll post a link down below, I actually cover that historical chart. But the point here is that we have a bit of a problem because this is already reversed and it's already confirmed. It's already confirmed that this is going to go higher, right? Now, you're probably asking, well, what's the count? Okay, so I'll give it to you in a second. Okay, so we had the initial bounce wave 1. Okay, we had basically a wave down here. Okay, we had a B wave up here, a C wave here, but we've only seen an A wave of a D wave. Now, this is adding to the problems, right? This is adding to the problems that I can see coming down the pipe. And the reason for that is, quite simply put, this is still within wave 2, right? If this count is correct, this is still within wave 2. Does that compute at all? What I'm trying to say is, if we just had A and a completed B wave, and we're looking for C of that D wave, right? Typically what happens with D waves is they are known to be breakout waves. So they tend to break out of a previous high, right? Yes, this may sound very strange, but I have seen it happen time and time again. Now, typically after it does reach that level, it will then pull back for wave E. Okay, so there needs to be a wave E at some point, and I'm not entirely sure what that's going to look like. Okay, it could definitely be lengthy and drawn out, or it might just be a straight down and up move, or whatever, right? So basically what that means is that wave 2 will be complete. Now, this to me is very strange, right? It's very strange because it just makes me think that for a wave 2 correction to be this large, it would seriously need to go higher, a lot higher than 16%, a lot higher than 20%, right? So for me at this point in time, that sounds ridiculous, right? It sounds absolutely absurd. So therefore, look, there are ways for this to happen and it not go higher, 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 right? There's a thing called a weak 5-wave move, right? So what that means is you get basically like a wave one, right? In this case, you've got an expanded correction, right? So let's just draw this out real quick. A, B, C, you got D, and then you can have an E come back down quite substantially, right? And then you can then have a wave 3 that basically goes higher, but it has to make a high above the previous high, right? And then you can get the same thing happen again, right? Where you get the step down. You can even get the expansion again, the E back down, and then the 1, 2, 3, 4, 5. The fifth wave has to make the final high. Now this can be like known as a 5-wave move, it's a weak 5-wave move, right? I don't know if that's going to happen. I really don't know. I really don't know if that's going to happen this way or it's going to shoot straight up. There are certain things that I cannot know. Okay. Now, just because I said to you that the D wave tends to be a breakout wave, it doesn't necessarily mean that it's going to break the previous high. It's just known to do that, right? So it could definitely just go up this high and then pull back, right? But look, this idea of this happening is already pretty, it's bad enough. It's bad enough as it is that there's even a potential for this to even be the case right now. Because given where the stock market is in what looks like to be the completed pattern, this would then basically trigger that collapse in the market, which would be upwards of 80%, or it could be less than that. Yeah, more or less. Look, it could be more. I don't know. I really don't know. All I do is follow the waves. And to me, they're just very interesting to note because these patterns do repeat all the time. And at this point in time, it's just very interesting to see how, we've basically got this A. Okay, so I see this is the complete 5-wave move up here for wave A. And then I can see a zigzag A, a B, a C, a D, and an E, right? So once you break the start of wave E, it's basically like confirmation that this is going higher. This is now the new base support. If you want to take a trade on this, you basically can take it now because that's the entry point triggered. And you can go and ride that much higher. Typically this is just how the waves work across any chart. Aside from that, if this count is incorrect, well, obviously we'll have to wait and see to see what happens. This could it be a zigzag, this particular pattern? Well, if you look closely down here, you can see like a weak 5-wave move, wave 1, or wave A, sorry. Then you've got an A, B, C, D, E, and then you got the C wave up. So the C wave up, you can see how it could be longer than the A wave. That's just my opinion on that one. And then you've got, the D wave being quite small here, A, B, C, D, E. Anyway, so the point, I know this video has been, it's been quite long, but what I'll start to do in the next videos is start to basically explain how AriasWave works and all the wave components, and perhaps eventually start moving towards doing whiteboard videos. But for now, I'm just going to sort of just leave it at that, just for an introduction and my view on what's coming next for interest rates and how that will affect the stock market. So hopefully you found this interesting and informative. Thank you for watching.